Happy Monday to you. This is the John McEntyre Show Money Live. John McEntyre Show Money Live. Well, it's alive. It's John McEntyre and I'm live. Um, Today is August the 18th, 2025. So we're roughly going into the last week of the month here. Hopefully you're on those goals, meeting those, making those wallet wins, which by the way, don't forget to share those. Hashtag wallet win. Put them into the chat there. I'll make sure if I see them, I will share them. I want to thank everyone for interacting with me, and um, I thank for all of the input, feedback for the live here. That I'm actually, helping people because that's what it's all about. This is about you and helping you. And so remember, this is alive. I have to remind people, call, you can actually contact us. You can go through the chat, live chat with me. I see the question or comment. If it's a question, put an uppercase Q, capital Q, whichever one you like. I see it. I'll make sure. You can also call us. You can call us and leave us if you want to actually appear live on the show with me on this live. You can actually contact us. We'll talk, and then we'll make the decision whether or not it would be a good fit for the show. And that would be even better to actually see someone else besides me on here asking questions. But other than that, I actually have a good show today. Someone from my crew at the gym, my crew, they say I help them being financially fit. Most of them, they're older retirees, so I get a lot of wisdom from these, and they're constantly asking questions because they have the time. They're actually watching the news, so anytime something happens, they'll come in. Hey, John, what do you think about this? And so I actually had a very good one today, which was about the president making this order for companies to make more alternative investment choices available for the 401k. And so that's what I'm going to discuss today, which is, just more investment choices for the 401k and what it means for you, the investor, um, who has a 401k. Now, just to just to get started here, you know, the funds in most retirement accounts, 401ks, is it's pretty basic stuff. Stocks and bonds, in the form of S&P 500 index funds, whatever, and the company actually makes the choices, make available the choices, and so when you uh, go with an employer and you choose to to put money into a 401k, to contribute to a 401k. And my main rule is only if the employer is making a contribution. The best one is a dollar for dollar, the 100% contribution. For every dollar you put in, they put in a dollar. That's beautiful. But anything, once it's, if it's a 15% or above, um, I'm usually good with it because that's basically they're matching, uh, basically what the market does on average. The market actually does much less than that. So if they're matching any type of making a contribution with you, that's always a good thing. And you're also going to be active in making sure you choose the right investment for funds for your 401k. So that's my groundwork with it. And like I said, it's always been pretty basic, the stocks and bonds things. Well, the executive order from the president it aims to lay the groundwork for more alternative assets, cryptocurrency, real estate, private equity, these types of investments, which is called alternative. And there's a big meaning behind alternative in the investment world, in the financial world. But he made this order that they be made pretty much available to investors in their 401ks. And one of the reasons I believe personally is because other investments, there's, for instance, let's say um, private equity. There's roughly 10, 4, around 5 trillion, something like that, around 5 trillion in private equity. 401ks is one of the largest pool of American money out there. So $43 trillion. It's $43 trillion there. And I personally believe that some of these companies, some of these contributors, these owners of these companies, and not all of them are bad. Don't get me wrong. Not all, and I will get into that. Not all alternative investments are bad, um, especially in the private equity area, and some real estate. And I even and before I get off the live, I will give you a much better strategy than using the 401k, because I'm not a big fan of this. Because there are other ways that have been out there that people have been doing. Um, but like I said, just to get back to it, that's a large amount of money. And so these companies are these alternative investments are always looking for money. And that is a lot of money to only be shared with, the stock market, stocks and bonds. So they I'm hearing a conversation like this. It isn't fair that only the market has access to $43 trillion. Shouldn't these investors be exposed to other investments that we offer, even though they are alternative? Shouldn't we be able to have access to those types of to that pool of money? Because that's a lot of money for one sector of the market to have access to, even though it's the largest part of the market. Um, Real estate and stock market run neck and neck. Uh, so that's the way I see it. It's just a large amount of money there. I don't see it that the investors are the actual people who are owners of the 401k are actually saying, hey, we want more alternative investments. They're not saying that. The ones that are pretty smart and savvy and are active in their investments, they already know about these things, and they probably already are investing in them anyway in different ways, the much savvier ways, which, like I said, I will cover one of the better strategies that I've seen. And so that's why I think that this so-called revolutionary move of making 401ks able to hold these types of investments, that's all that it is. um you know the Department of Labor, the Treasury, the Securities and Exchange Commission, they've made it clear. um they've made it clear that everything has to be made in order for the path uh, to be cleared for these alternative investments to be made accessible to the everyday investor, because that's what I usually call the 401k investors. They're the everyday investors. And also another point, they're more 401k millionaires than any other type of millionaires out there. The bulk of the millionaires in America are from 401ks. They've been invested for a long period of time. Their money has been working for a long period of time, and that's what has made them a millionaire. It's just the tried and true path that hasn't been as rocky and bumpy. And so that's another reason why some companies are wanting access to this money, because they know that these are millionaires. Now, because they are 401k millionaires, it doesn't mean that they are savvy. It does mean that they've been disciplined, which is a form of savviness. But when I'm talking about savvy, I mean like they have a high knowledge of all of these different investments. No, they chose their path and they stuck with it, and that's what has made them millionaires. Okay, so and with that, in the 401k is very regulated. The Department of Labor, the Treasury, the Security Exchange Commission has made it perfectly clear that there are certain rules in place to protect the investor from themselves, not just from unscrupulous business businesses. And you know there's a lot of scammers and crooks out there. So wherever there's a lot of money, there's going to be a lot of scammers. We all know that. Well, in this particular situation, just because these alternative investments are going to be made privy to the public, which is going to take some time. It's not going to happen tomorrow. It's just going to take some time. Um, it's going to be regulated. And when you hear the word regulated, it's going to sort of be watered down a little bit. Um, so I'll move forward after saying that. Now I can actually move forward. Now, the first one I want to address is, going into it because, when it was asked, what is private equity? What are these alternative investments? Private equity being one of them, one of the larger ones. These are basically equity firms. The private equity are firms that they're investment companies that buy up companies or assets. Basically, most of the time they're in distress. You know, uh, Close to bankruptcy. If it's private investment going towards real estate, is the big foreclosure properties. Uh, and a lot of sometimes these private equity firms they do a very good job in turning companies around. For instance, Toys R Us, they turn Toys R Us around. Now there's some companies, private equity companies, they don't turn other companies around. They're just not publicly traded. One of my favorites, Aldi's. Aldi's supermarket. Um, it's not publicly traded. It's private. It's privately held. There's a lot of privately held companies out there. Uh, uh, and but then you have some of the other ones that have influence with the president, SpaceX, things like that. These are privately held companies who has the ear, and they're pushing so that they can have access to that $43 trillion. But these are some of the companies, that I just named, for instance, Toys R Us was turned around by a private equity firm. All these is private equity. And so these historically, they've been, made privy to, made accessible to large investors and institutions. Universities, for instance, invest in private equity. State pension plans, the state pension plans, uh, as well as very wealthy people, the extremely wealthy people, because they are sophisticated. And if they are these universities and everything, they have advisors that the average investor don't have access to. These are the very high level 1%, upper 1% advisors. And so, unless you have been a millionaire for a few years, or you earn a certain, a mid six figure household income, you would never see these investments. You've just been protected from them if you don't earn that kind of money, because they're very alternative. Also means sophisticated. That's also one of the meanings. And so that's why, a lot of times you see these companies, you just don't know, you're buying from them, you're shopping from them, you're using them, you just don't know that they're private equity or whatever. And you don't see them on the stock exchange anywhere, like the S&P or anything like that. Uh, so making these types of investments available to 401k, that would be a huge change. And the term democratization has been thrown around, which basically meaning making it accessible to larger pool of people, um, making these private exclusive investments that were mainly for the wealthy, available to everyone. Um, and it hasn't been an option for the regular investors. You know, it 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 the wealthy have been made privy to it because they have the money. They have those three E's: the excessive time, the excessive education, and the excessive money. They have those three, and so they're able to take advantage of these types of investments. Um, Democratization says, okay, why don't we just make them available to everyone? And I can understand that, but I still don't believe that you would actually, as the everyday investor, you would get the same exact investment that the wealthy has always received, mainly because they're just savvy. Um, and if you don't have that education, that excessive time, the excessive money, you're not a savvy investor. You are a gambler. And SEC is basically have said that they're not going to allow that to happen, that these things are going to have to, they're going to have to be regulated, because some of them are not as regulated, i.e. cryptocurrency. It's not regulated. I'm talking about private equity, but I'll get into cryptocurrency. And it also, these companies, private equity firms, for instance, they will be made available. But I'm just not convinced that they're going to be the best ones made available, because the wealthy are going to be like, you're not going to take from us to just give to unsophisticated investors that don't know what they're doing, because the wealthy, the golden rule is do unto others as you will have others do unto you. But there's also the rule of gold. He who has the money makes the rules. And so these wealthy people, I don't think that they're going to, be too quick to allow those great investments to just go to unsavvy people, because, their thinking is, okay, they haven't taken the time to understand what they're investing in and everything, and they're going to take losses when we know what we're doing. So it's really taken from us when we know what we're doing, and we know a good investment when we see it. All right. And so that's my take on it as far as that goes. Now, cryptocurrency, for instance, cryptocurrency is extremely volatile, and it's kind of new. It still is new, even though it's done some great things. It has done some great things. I mean, just a few years ago, if you bought what is it, Bitcoin, one of the cryptocurrencies, $3,500. Today you would have $118,000. And it's less than 10 years, something like that. Yes, that's good, but that was for the early adopters, and these were actually people that understood the investment. They understood cryptocurrency, or the ones that invest, they knew someone that knew what they were talking about, and they were like, hey, you're my friend. This is going to be an excellent investment. I'm putting my money into it. So the friend was like, okay, well, if you're putting your money into it, I'll put my money into it. And so that's what they've done. But most of the time when investments have to go into the actual mass market for investors, it has to be regulated. It has to be what they call processed into a retail type, which means you can have a custom made car, for instance. You can go out and buy a custom made car. Rolls Royce, good example. Rolls Royce is not a retail type car. When you buy a new Rolls Royce, you wait 6 months because it has to be built custom. It's custom built. They don't build a lot of them and put them on lots everywhere. So you can't go to a car lot and buy a brand new Rolls Royce and drive it home that day. The only way you're going to get a brand new is if someone bought it and something happened and they took it back. And most of the time it won't even make it to the lot. They're going to call someone and let them know, hey, it's a new Rolls Royce here. Here's what we'll sell it to you for, this, that, and the other. Retail, like mutual funds, for instance. Mutual funds was created for retail purposes. It's a bunch of investments put together into a pool and boxed neatly and has all the regulations included and everything, and then says, hey, this is for you. Even if you're not savvy and sophisticated, this is still a great investment for you. And it is proven over time, with the S&P, index funds, things like that, mutual funds, exchange traded funds, those things have proven over time, even though they haven't been perfect. They've done their ups and downs, but over time, they've proven they are tried and true. They're proven. That's where like I said earlier, that's where the 401k millionaire comes from. And so these things have to be regulated. The process is underway to get these alternative investments ready for retail, to look retail. And it's going to be a huge market, for the investors. The reason why I don't really care too much for them, like I said, with the private equity firm, they usually charge around 2% of management fees on a year. and around 20% of the profit. And so over a long period of time, that's a lot of money being taken from you. Whereas over here with the S&P 500 index funds, things like that, they have very low fees. They are what they are, and you don't have to see, oh yes, I made this much, but look how much I gave up. So things have to really do very, very well for you to over a long period of time. And that's another point with private investments, private equity especially. You're locked in for a long period of time. You're locked in. So once you've gone into it, you have to stay in. You have to stay in it for a certain period of time. Um, and they are the ones that set these parameters. So with the market over here, you have something today. For some strange reason you want out of it, you can like get out of it. Now there may be some penalties and things like that, but you can get out of it. Over here with private equity, once in, you're in. You're just locked in. And if the company goes belly up or whatever, you just lost your money. um, and so that's what's being worked out. uh, you know and the track record for private equity over the past like 12 years, it's been sort of mediocre anyway, except for those early adopters, the wealthy, the higher ups ones. They've done very well. uh, Crypto on its own, it has its own risks. Like I said earlier, it's highly volatile and it's loosely regulated. I mean, it's the new kid on the block, and it's still a youth. It's still in its youth. It's like a teenager, and it's like the internet was when the internet first came out. The internet, it was just whatever. Everything, whatever happens, just happened on the internet till and it's still not as regulated as it could be, but it is under control. So that's my thing, and I'll cover a better alternative with it. What I would say is just stick with the stocks and bonds for this 401k business. Just stick with them unless you're. And plus, another thing that I forgot to mention, the company are the ones that have to decide what's going to go into the 401k, and by law, the company you work for, they have to be a fiduciary to you, which means they have to protect your interests. And so it may not be your best interest to be in these cryptocurrencies or these private equities or even real estate, even though real estate is much more stable. But when you get on the higher type stuff, it's much more sophisticated. Even though I'm a little bit more, I'm more trusting towards real estate than the other two. It's not that I don't trust the other two. It's just that I'm more trusting towards, the real estate in the form of REITs and things like that. Real estate investment and trust is what basically what a REIT is. Now, I will say this: some of you out there, you have 401k, and you're just bent on having some alternative investments in your 401k. Just like anything, it's a new asset. Don't take all of your 401k and throw it into that. 5-10% at the max. No more than 10%, just to see what it's going to do. Because there's another way. Other than that, just stick with the basics of the stocks and bond index funds. Because you're principally guaranteed, on not to lose your principal, and the fees are extremely low. So that's my take on that. Plus, S&P has been repeatedly setting records lately. So for your 401k, for your long-term retirement accounts, that's not a bad thing anyway. This is, the 401k is your long-term account. It's your long-term retirement account. And yes, you do want to be, sort of aggressive, but depending on your age and stage in life, the younger you are, the more aggressive you can be, because you have the benefit of time to actually, bounce back, things like that. For if the market did go down, something happened, a dip happened, time you would have time to recoup or whatever. And you know, most people that I know that are in 401ks, just tracking that is good enough for them. They're seeing growth, they're seeing things happen, good things. They're checking. I always say, make sure you're staying, active in it. No, I'm not saying you're trading or anything like that. I'm just saying that you are watching. You just didn't park it and prayed and hope that and just turn a blind eye to it. You're actually paying attention and making sure things are being rebalanced and everything like that. Um, it's just tried and true. It's just tried and true for the long term. Um, Now, I said earlier, what if you did want to do these alternatives? Um, there's something out there. I know you've all heard about it. The IRA, specifically the self-directed IRA. You've always been able to put these types of investments in that vehicle, because this is what they are: 401ks, IRAs, like I said, 403bs. They're vehicles. They're not investments. They're containers, vehicles that hold the investments. That's basically what they are. And so you have to keep that in mind. IRAs, Roth IRAs, self-directed IRAs, they've been allowing these types of investments for the longest. I mean, I know real estate investors personally that use their IRAs to invest in real estate and to hold it, things like that. I personally know them. They've been doing it for years. Um, I know some people in cryptocurrency, Bitcoin, things like that. They were like, yes, I'm using my IRA. Um, they have a very good tax attorney, accountants, and all of this, and they've studied it themselves. They've taken time to understand the investment, what it's all about. And the IRS, they have rules in place. So before I would go out and if I already have a 401k and everything is doing fine, before I would actually just use my 401k, that money that's there for my retirement, the IRS allows you to have other investment accounts. I would just have one of the others. Me personally, I would just do an IRA, self-directed IRA, Roth IRA, one of those types of investment accounts, because you can make contributions to those once you've maxed out your 401ks. You can have you can have an IRA. I would go that route, and it would be my pool over here where I can be much as aggressive as you want to be, um, within parameters of your knowledge and skills. That's what I would do. That's my take on it. This 401k alternative investment for the everyday investor, I'm not sold on it. There's going to be some time. I need 10, 15, 20 years to see this really work itself out. Whereas over here, rules are in place. The IRS is saying basically, before you do that, just go over and do it in an IRA. Just do it that way. Your Roth or self-directed IRA. Hey, there you go. So that's my take on it. I'm going to end it there. Let's see, we have any questions? No questions, comments, no wallet wins. Don't forget to share those wallet wins with me. Um, if you need more information, want to talk more about this, contact us. Our information is on the screen there. Get on the calendar. Get on the calendar to set up a quick 20 to 30-minute conversation, just to understand where you are financially, and would this be a good alternative for you, or what would be a better alternative, or should you even be concerned about it anyway? Give us a call, talk to us. We'll make sure and point you in the right direction of getting your money on target. So with that being said, I will see you next time. Same channels, Facebook Live, YouTube Live. Don't forget to share, hit that like button, hit the subscribe so you'll know when I'm about to go live. And I will see you next time.